What's going on, everybody? It's Austin, aka More Than an Agent. Today I want to give you 5 ways that you can make money off of one rental property. 5 ways that you can make money off of one rental property. So, 5 ways you can make money from one rental property. We're gonna make a house here. And we'll have it have some units. So 1, 2, 3, 4. 4 units. We see my house there, but you know what I'm talking about, right? Come on now. 5 ways you can make money from one rental property. So let's talk about this. And this is the reason why I absolutely love real estate as an investment vehicle. Everybody has their choice, their vehicle to financial freedom, to wealth building, to making extra side income, so on and so forth. Real estate, at least for me, some people love stocks, forex, crypto, whatever the case. For me, with real estate, I can make money from 5 different sources on one rental property. And for me, at least, with real estate, this is what completely takes the cake, right? So let's talk about this. We'll come over here with it, right? So here we go, right? Number 1, the beautiful part about it, especially with income properties, is the rental income, right? So you got rental income coming in on a monthly basis for as long as you own the property. Until you sell it, you're entitled to that rent every single month. That's rental income coming in every single month, right? This is the popular one, very self-explanatory, rental income. Number 2 is the appreciation of the property. So you're making money on rent on a monthly basis, and then what's happening over time? Real estate is appreciating. Now, obviously, by the time of this video, at least, we're going through all the recession talks, home prices are kind of fluctuating, so on and so forth. But the reality is that in the long run, we know upward trajectory, and real estate appreciates in value. So you're making money on rental income, you're making money with the appreciation of value over time. Number 3, which people often forget about, and I don't want to say often forget about, I actually forget about this sometimes because I'm so focused on the rental income, I'm so focused on making sure that the net profit from cash flow is a certain number, and I make that my goal, right? But along with the appreciation, right, which if you bought at this particular price, say $500,000, and now it's worth $550,000, right? That's the upside. That's the appreciation. But then you have the downside. And when I say downside, I mean the downside, not downside as in the negative aspect of it, the downside, which is the debt pay down, right? Your debt is being paid down by the rental income. And what I love about it is that the appreciation and the debt pay down effect, it causes a separation, thus increasing your net worth, right, as time goes on. So if you bought at $500, the property's worth $550, so you got the upside. But over time, the tenants and the residents have paid down the debt. So now, instead of owing $500, you now owe $480 or $475. So instead of the $50,000 as far as equity and net worth change, positive net worth, you're now looking at 60, 75, so on and so forth, because you have that difference in between, which I often forget about, to be honest with you. And there's sometimes where I check the loan balance and I'm like, wow, I didn't realize we paid off that much. Now, in reality, especially with real estate, the first 5 to 10 years you're paying heavy interest, right? Heavy interest. So the money that you're paying on a monthly basis isn't necessarily going all towards the principal, right? So if you bought the house for $500 and your monthly payment is $3,000, right? When you make your first mortgage payment, you automatically don't owe $497, right? You actually might owe $499 or $4,900, $4,950, or $400,999,050. You get the point, right? Interest is paid heavily in the front, and then over time do you really start to tackle your principal. But you still will contribute to your principal a monthly basis, just not as much in the latter years, especially if it's a 30-year mortgage, than in the first 5 to 10 years, right? So you have your debt pay down. So here's 3 right off the rip. You got the rental income coming in, the appreciation, the debt pay down. The fourth thing, which people know about but often forget about, and this is something that I don't forget about, because this is why we also get into real estate and this particular investment vehicle, is the tax savings. People are so focused on making money that we forget how we can save. If you think your housing expense, respectfully, you think your housing expense is your most expensive expense, it's not. It's taxes. Whatever you make like in totality, whether gross if you're a business, whether you're a W-2, whether you're an employee and you're on salary, your salary, right, is your gross. And then taxes off the rip. So if you're an employee, average tax bracket, right, 30% off the rip. Off the rip, right? So if you make $100,000 a year, 30,000 of it is going to taxes. 30,000, right? You can stay in a decent apartment for $2,000 a month and still pay less than what you would in taxes. So tax savings, and I like when my accountant calls it printing money, printing phantom money, printing ghost money, because it's money that is technically not there until you allocate it and follow your accounting protocols and rules and everything like that. And you see how much you save. Real estate has saved me and my wife so much money with the tax write-offs, that we then are able to carry over as losses to our main income. Very, very beautiful thing, right? So tax savings. The fourth way that you can make, quote unquote, print ghost money, phantom money, money that doesn't arrive until it's tax season and then it's tax time, right? So that's number 4. And number 5, this I count as a bonus. Is leverage. Leverage. The ability to control a lot with a little. And in this case, you only have to put a certain amount of money down in order to control a couple $100,000 asset, right? So put it like this. If Cash Money Records, if Apple, Google, Big Baller Brand, if these businesses went on sale and all a company or an individual had to do is put down 3.5% of the purchase price, that's leverage. And real estate, at least from a rental property perspective, are many businesses. They're many businesses. They produce income, they have expenses, you make profit off them, and at some point in time, you got to find a way how to acquire that business, that asset, either way, right? So leverage, and the reason why I'm putting this as a bonus, I'll put an asterisk next to this, is because, and we'll talk about this in another video as far as creative financing and so on and so forth, but the reality is that you can pull off deals and transactions with no money out of pocket. You can pull off deals and close transactions where you're closing on a deal using your money, but then refinancing out or finding other creative ways to take that money back out. Which at that point, you're now creating money, you're creating the income or creating the money in order for you to gain control of the asset, but still might have an opportunity to pull that cash right back out. So it's just like a vending machine. If every time I put my dollar in and I get $1.50 back, I'm gonna stay there, right? But there's nowhere else to go. I'm gonna keep putting in $1 and getting $1.50, right? And obviously, not for the sake of time like that, we care about the dollar, but what if that vending machine is accepting dollars? What if this vending machine is accepting $500? What if this vending machine is accepting $2,000? Every time that you put $2,000 back, $2,000 in, you get $3,500 back, right? businesses, in this particular case, using leverage, you can have the opportunity to control a lot with so little, and being able to put money in to fund the deal, to get the deal closed, while taking all of that money back out, thus creating the down payment money that you needed, and then obviously refinancing, getting that money back, and now you can use that for another deal, so on and so forth. But that's why like leverage like gives us the opportunity for us, like, you know, for us on a quote unquote Main Street America. I'm not creating the next Facebook. I'm not creating the next Google. I'm fair with my assessment of that. I'm good with that. But I can close a lot of deals, and I know how to creatively put deals together to the point where I don't need as much money as I would, or the normal individual who is just purchasing properties outright. And that's due to leverage, and I wouldn't have it any other way. And I had a conversation with a friend of mine, and she just asked a simple question, like, if you had the cash, because we were talking about interest rates, and she said, if you had the cash, like, why wouldn't you just purchase the property outright? And you don't have to worry about the interest rate. Yeah, it makes sense, without a doubt. But I'm still going to take leverage. I'm still going to use the bank's money against itself. I'm still going to keep my money safe while using other people's money. People think that other people's money mean like an individual, a person. But other people's money can include corporations, can include banks, can include private investors, so on and so forth. So these 5 ways, honestly, is how we've been able to substantially grow our net worth pretty rapidly while not having, per se, all the funds to just purchase these properties just outright. Like, no, like, personally, I don't have just $500,000 that I can consistently purchase real estate over and over, right? So this honestly is like the blueprint on how one good deal can really, really, really set you up, either for the next deal or even just making your life and your personal finances more efficient. But these 5 ways, like, of how you can make money, like, from one rental property, it's just gold. It's gold. I can't even imagine like not being in a field where which is why, like, stocks for me at least, I have to wait for it to go up, and I have to sell, like, in order to make the money, right? But with real estate, I have the rental income. I can refinance. I can take out a home equity line of credit. Like, there's ways to be able to tap into that. So in this particular case, listen, I'm all around. Be sure to follow me. Like this, share this. Let's get this information out. Let's continue to buy this block back. Let's continue to enhance our own lives, our families' lives, whatever that wants to do. If you did not have to work, what would you do? And some people like have no problem working, and some people have no problem building something that's way bigger than just a job. But in that particular case, you got to ask yourself, what would I do if money wasn't my hindrance? What would I do if I had more time on my side? What would you do? So be sure to click that link in bio, whether you're ready to start your home buying journey, whether you're ready to start buying investment properties, whether you're just looking to pick my brain. There's a link on there just if you want to pick my brain and ask a couple of questions. Click that link in bio. This is Austin, aka More Than an Agent, and be on the lookout.